Okay, good morning, everyone. Uh, in this particular um, videos, we are going to discuss the CA final subject, that is indirect tax laws. We will have a full course on indirect tax laws. We have a session. It goes around 150 to 160 hours of session if in indirect tax laws. Uh, Daily, we will be uploading a class for 1 to 2 hours or 3 hours in the holiday session. So you can have access to the classes from the YouTube in my channel, that is Gaddi Vineet. You can subscribe to the channel uh, so that you can get a notification when I upload the next class for you. So uh, in CA Final GST, you will cover the entire area. Indirect tax laws, in CA Final indirect tax laws, you will have two portions, that is three portions, that is one GST, and the second portion is about customs, and the third portion is about FTP, that is foreign trade policy. When it comes to GST, in Inter you have some basic, you have introduction to the GST, you having valuation provisions, you having ITC provisions, you have provisions relating to registration. When it comes to the final, you'll have these syllabus also will be covered in the final, but in detail you will be covering. Uh, and after that, you will be having some legal consequences, the penalty provisions, the adjudication provisions, the appeal provisions, the confiscation related things. All these will be covering in the final. So today we are going to discuss the introduction, that is chapter number 1, that is GST in India, and introduction. Okay, this chapter is important for the MCQ point of view. You will get around 2 marks MCQ from this chapter. If at all the examiner want to ask, he will ask the 4 marks theory question from this chapter. So you can't just leave this chapter and go to the exam, as every provision or everything is important. So this is the importance of this chapter. That is, you can get a 2 marks MCQ or a 1 mark MCQ and a 4 marks question from this chapter. First of what is normally GST is levied on the supply of goods or services. That means for GST to be levied, there should be supply. Supply of what? Supply of goods or services. What is supply? What are classified under goods? What are classified under services? That we will going to discuss in detail in the further upcoming 1 minute. Other upcoming things, of upcoming classes. Now, in this particular session, we are going to discuss how the GST was introduced in India, uh, how the GST came into India, who introduced, which government has introduced in India, which government has taken first initiative to introduce GST in India, when the act has came into picture, but on which government came on which under which government the GST has came into picture, that we're going to deal in this particular session. Normally, first in 2000, the Prime Minister mooted the concept of GST and set up a committee to design a goods and services tax, that is GST model for the country. After then, slowly the government got changed. The government got changed, and then Prime Minister, then Union Finance Minister mooted this GST for some more days, and a session about these law sessions has conducted in the Parliament, so that a movement has came. And slowly in the year 2014, effective GST amendment bill was passed in the constitution, that is 122nd amendment bill 2014, that was passed in the constitution. uh, tabled means that put to the chair of the speaker, put to the chair of the member of parliament members in the for to pass the bill. And slowly it took uh, s- slowly it took some states assent, day by day, day by day. and the year 2016, in the year 2016, the 101st Amendment Act 2016 has came. By this Amendment Act, this 101st Amendment Act 2016, the GST paved the way paved way in India. That means 101st Amendment Act 2016. With these 101st Amendment Act 2016, the GST Act, that is the CGST Act 2017, SGST Act 2017, IGST Act 2017, UTGST Act 2017 came into picture. When the what are the CGST laws, SGST laws, IGST laws, UTGST law means uh, actually, the GST law, in one GST law, we have some acts, that is CGST Act 2017, where central government has framed some laws for the intrastate supplies, and state government, that is SGST Act 2017, where state government framed their own laws. In case of interstate supply, there are some IGST laws applicable. When there is an intrastate supply, which taken place in the union territory, the UTGST law, that is 2017, UTGST law 2017 applies. Based where the supply has taken place, uh, is the where the supply has taken place is one of the condition to check what are the acts applicable for that particular supply. You need to remember this 101st Amendment Act 2016. You will in MCQ there will be 101st Amendment Act 2017. So obviously you will tick for 101st Amendment Act 2017. That is not 101st Amendment Act 2017. It is 101st Amendment Act 2016, CGST Act 2017. When CGST Act, when the GST law introduced in India means it came effect from 1st of July 2017. From the 1st July 2017, GST introduced in India. After that, but it is not applicable to all the states except Jammu and Kashmir. It is applicable from 1st July 2017, and from 8th July 2017, Jammu and Kashmir also came under the purview of GST. So from 8th July 2017, for all particular states, the GST law is applicable, except Jammu and Kashmir means from 1st of July 2017, the GST Act is applicable. Okay. We can see it. The enactment of the central acts was followed by the enactment of the state GST laws by various state legislatures. As Telangana was the first state to approve the GST, uh, territories and the respective CGST, except Jammu and Kashmir, with effect from 1st July 2017. The historic indirect tax reform GST was introduced, and the GST law was extended to Jammu and Kashmir on 8th July 2017. That means from the 8th July 2017, for all in total India, the GST came into picture. Concept of GST. There are some concept of GST. We will understand this concept based on one example. Okay, 1 minute. Sorry for the interruption. Okay, we will understand the concept of GST through an example. Let us take an example here. This is one of the example how is different from his whole indirect tax laws. Let us take an example of this. There is a supplier A, B, C, D. Assume A, B, C, D are registered persons. Registered persons means they are registered under GST, and C is the ultimate consumer. C is the ultimate consumer. A, B, C, D are registered persons. Now what happened here means A is the manufacturer and supplier. Take an example like assume it as A is the manufacturer and a supplier. That means he manufactured the goods, the entire cost price, including his profit. He is selling the particular product good for rupees 100. This 100 includes his margin. So assume a GST rate of 10. Normally, there is no GST rate of 10%, but for our calculation purpose and for your easy understanding, let us take a GST rate of 10%. So for 100 rupees, A is charging 10 rupees as GST. So this is known as invoice value. Invoice value, and this is known as taxable. This is known as this is not taxable value. Here this is taxable value. This is the invoice value. For taxable value, if you add tax, it is called an invoice value. Please understand these terms. Okay, 100 rupees is selling price. If you add a 10 rupees of GST, you will get an 110 of invoice value. Now A is selling to B. A is selling to B uh, for 110 rupees. Now, as B is the registered person, as B is the registered person, the tax pay amount of 10 rupees paid to A. That means A is charging from B 110 rupees. In 110 rupees, he is paying 100 rupees for the good and 10 rupees as tax. That is, he's in total he is paying 110 rupees. So what the 10 rupees which B is paying to A will be get as credit. Will be getting as credit. That 10 rupees will be added to the B's electronics credit ledger. Okay. Now B cost price is 100 as 10 rupees is getting as credit to B. It is not a cost to him. Only the 100 rupees is the cost. And for that 100 rupees, he is adding his profit margin of rupees 10 and he is selling at rupees 110 to C. He is selling at rupees 110 to C. That is 110 is the taxable value. In that we are charging 10 rupees, 10% of GST, that is rupees 11, which amounts to rupees 11. And in total 121 is the invoice value. Now we will collect rupees 121 from C. Okay. Now what is the actual cost to C? 110. 110. 110 is the actual cost and the 11 is the tax component which C has paid to B, and B will in turn discharge uh, in turn pays this tax component to the government through GSTR1 or GSTR3B returns. Now, for C, 11 will be getting as input tax credit and it will be deposited. It will get reflected in the C's input tax credit ledger. Now, what's the cost for C? It is a 110 and which he includes rupees 10 as his margin and it amounts to 120 and and he charges GST at the 10% which amounts to 12 and the total invoice value comes to 132. Now for D, the same thing, 120 plus profit margin of 10, which amounts to 130, and the GST component of 13, and the invoice value is 143. Now, what is the thing which we understand here means GST is levied on only value addition. You can see here what A has charged to be what the tax component 10 rupees. Okay. Now, if you see, the tax component was slowly increasing to 11, 12, 13, 14. You can easily understand that uh, in 11, in rupees 11, the original 10 rupees is there. 20 rupees component is there. How it amounts to 11? The margin of 10 into 10%, which amounts to 1 rupee. The 10 rupees, the initial tax which B has paid to A and plus 1 rupee margin, that is 11 rupees. And this 12 rupees also, C, 11 rupees which C has paid to B and extra on 10 rupees margin, it is 10 rupee at a rate 10%, that is 1 rupee, which amounts to 12 rupees. Here also 12 plus 1, 13 rupees. Now you can see here like 10 rupees, 10 rupees, 10 rupees, 11 rupees, 12 rupees, and 1 rupee, and 11, 12, 13. This 1 rupees, 10 rupees at the rate 10%, 10 rupees at the rate 10%, 10 rupees at the rate 10%. That means GST is levied only on the value addition, not the value which includes of GST. That means it will be levied only on the taxable value, which does not include tax. Okay. He is the ultimate consumer. As the GST is the consumption based tax, the ultimate consumer should bear the tax. That is 143. Then he is liable. Uh, he will be bearing the entire 13 rupees. 13 rupees tax. Okay, as he is the final consumer, he will not getting any credit. This is the first thing, that is the value add. Only on the value addition the tax will be levied. The GST will be levied. So it is known as value added tax.
And the next thing was hmm, how it is benefited from the other indirect tax laws means how it took an advantage means you take A is the manufacturer. Normally, for the manufacturing of goods, there is an excise duty. Excise duty will be levied at the when the goods passes the factory from the factory premises. The manufacturer need to discharge the excise duty. That means the point of taxation of the excise duty arrives only when the goods crosses the factory. So let us assume a 10% of excise duty. For that, it amounts to rupees 10. That is, and the total amount to 110 rupees. What happened here means the cascading effect is there in the whole indirect tax. Like if a particular law changes, that means up to a seller point of up to a trader point of view, that when a manufacturer sells to a trader, the excise duty will be levied, and the way and when the trader sells to other trader or trader will when a trader sells to the end consumer, as that law here gets different. Like means the excise log will get in and the other VAT law, that is a state tax, will take into picture. When the law changes, the tax chain get breaks here. When the tax chain get breaks here, there is no flow of input tax credit from the one law to other law. So there is a cascading effect. What is this cascading effect means? 100 rupees is the manufacturing cost, including profit to the manufacturer, and the 10% of excise duty, which whole comes to 110 rupees. And on these 110 rupees, the trader need to he will add some margin, that is it amounts to 20. Total taxable value was 130. On this 130, VAT at the rate 14.5% was levied, so it amounts to 18.85. By the cascading effect here, that means in this 10 rupees, the excise duty, the excise comp on the excise component also, the VAT at the rate 14.5% was levied here. So that was the cascading effect that took place in the old indirect tax laws. As the excise duty was different, VAT was different. Excise duty will be levied by the central government, VAT will be levied by the state government. So as the state government and central government was involved, and there are different laws, so the cascading effect was there in the previous law. And when there is a same law also, there is a cascading effect. How means there is a breakage of the input tax credit here. How means, you see, where a person's let us take an example like A is there, B is there, C is there. He he is from Karnataka, he is from Telangana, he is from Telangana. Now A purchase goods, B purchase goods from Karnataka, purchase goods from Karnataka. What B will pay? He will pay CST. The CST will pay. Now B will sell in Telangana. B will sell in Telangana. A will sell to B. B will sell to C. A is in Karnataka, B is registered in Telangana, C is registered in Telangana. I am explaining you the old indirect tax, old law, that is VAT law, sales tax. Okay. Okay, A is registered in Karnataka, B is registered in Telangana, C is registered in Telangana. When A sells to B, B collects from A the CST component, that is central sales tax. As A is registered in Karnataka, B is registered in Telangana, so CST will come. So A will collect CST from B. Now, what the CST component which B has paid to A will not be getting credit to B. Why means there is a condition in VAT. There is a condition in VAT law. The first basic condition was purchase should be made within the state. That means when the purchase made within the state only, that the portion of tax which he pays to the supplier only will be getting as credit. So here supply takes between two different states. So CST component was involved. So the CST component which B has paid to A will not be getting as credit. So even in the same law also, where two different taxes are levied, the input tax credit, that the tax credit chain breaks. So this is also one of the disadvantage. This is what all in this there. You see, uh, concept of GST. GST is a value added tax. It is levied on supply. That means the supply is the king here, and it will be levied on sale of goods and provision of services. So provision of services. It is a value added tax. Only on value addition only the tax will be levied. And continuous chain of tax credits. Here in this example we have shown like A, B, C, D are registered persons. If they are registered persons, what tax which they have paid to the previous supplier will be getting as credit, as it will be directly credited to their input tax credit ledger. That is the continuous chain of tax credits. And burden borne by the final consumer. You can take an example as E, which he is paying 13 rupees. As the tax chain breaks here, and the ultimate consumer will be bearing the GST. And no cascading effect. Here you can see that there is no tax on tax, only on the value addition there is tax. Okay, only on value addition there is tax, not on the tax component. Here 110, but the cost was 100, which 10 rupees will be getting as credit to B, and the margin was 10 rupees. This is the margin, not tax. Please understand. This is only the margin component, not the tax component. Tax component will be credited to their input tax credit ledger. So it will not be cost to them. So it is not included in their cost. Okay, as it is not the cost to them, so it is not included in the purchase value. Understood? It is not the cost to them, so it is not included in their cost purchase value. It will be credited to their input tax credit ledger, and balance sheet you will get it as an asset. Okay. No cascading effects in GST. The similar example, this which I has explained you, uh, but the amounts and rates and the GST components was different. You can go through this. If at all you have any, you can post in the comment section so that I can explain you after. This is what the cascading effect under earlier software VAT in the real VAT law. The goods they need to pay, and the goods component when they pay VAT on the service component also they used to pay service tax. That is the cascading effect, which I have explained you by taking excise duty and VAT. You can refer this example. If you have any doubt, you can mention in the comment section so that I will explain you the entire. I will explain you about this in detail. Okay, now we are going to discuss, as we have discussed that there is a CGST Act, there is an SGST Act, UTGST Act, and IGST Act. When these acts come means, uh, let us take an example like a person A is there and the person B is there. Person A, person B is there. Person A is registered in Telangana, person B registered in Karnataka. Person A is the supplier and the person B, both are registered. Both are registered. Assumptions are important here. Both are registered. A is registered in Telangana. B is registered in Karnataka. Both are registered. A is the supplier. B is the recipient. A is supplying to B. A is supplying to B. B is registered person. Registered place of business is Karnataka. Location of the supplier is Telangana. A is supplying to B. Location of the supplier is in Telangana. Uh, Location of the recipient is in Karnataka. So let us take an example. There is a movement of goods. There is a movement of goods. Not B is coming to Telangana and is purchasing. He ordered from Telangana. He is ordered by sitting in Karnataka only. He ordered some goods. He ordered so A supplied goods to B. There is a supply involves movement of goods from one state to other. Location of the supplier is in Telangana. Place of then the place of supply will be treated as a location of the registered place of business of the recipient. That detail will that will detail will go in the further chapters. Let understand some basic idea. I'm explaining you when the CGST will be levied, when SGST will be levied, when IGST will be levied, when UTGST will be levied. For understand the basic idea, you take this example. Look, what is the place of supply provisions will go in detail in the further chapters. Okay. Now, the location of the supplier is in Telangana. Let us assume the pace of supply takes place in Karnataka. That is, it is two different states. Two different states. Now, when the location of the supplier is in Telangana and the place of supply takes place in Karnataka, Now, Supply involves movement of goods. Look, place of supply, location of supply, two different states. Now, this supply is known as interstate supply. If there is an interstate supply, IGST will be come into the picture. IGST will come into the picture means the entire share of this tax will go to the central government. When as same example A, B and B is registered in Telangana only. Supply involve movement of goods Telangana to Telangana. Place of supply is also Telangana. This supply is known as intrastate supply. This supply is known as intrastate supply. Now, in case of an intrastate supply, CGST and SGST will be levied. When same example, A is registered in Pondicherry, B is registered in Pondicherry, as Pondicherry is the union territory. Now, instead of SGST, UTGST will be levied. That means CGST and UTGST will be levied. That is a concept where CGST will be levied, when SGST will be levied, when IGST will be levied, when UTGST will be levied. Okay. Uh, that's all this session. If at all you have any doubts, you post me in the comment section. Uh, Please like the video, and you can go with the second class. In that class, we will discuss uh, what is the concept of GST in detail, and what is the definition of the supply. What is supply means, includes, excludes. What are the different schedules in the supply? What classification of the goods, when it is classified as service, that and all we will uh, about to know in the next class. So thank you.